Good afternoon. It is Wednesday, 12/13, 4:35 p.m. I have an interesting story, people, that I think is very telling, very pertinent to what's going on right now. My wife has a friend. She's my friend too. She has some money to invest. She doesn't know anything about investments, finances, stocks. She never heard of Bitcoin. But she has, a nice sum of money to invest. And she's also the nervous type. Now, she was over yesterday, and I said to her, knowing her and her situation, you got to be able to sleep at night. Just put it in whatever, put it in the bank, put it in CDs, whatever. She's like, yeah, you don't even get anything. I said, that's what they're forcing you to do. They're forcing you to reach for yield, okay? That's what they're doing. They're forcing you to do that. So anyway, my wife took her to our stockbroker yesterday morning. Now this is the same broker, if you remember. I've talked about her. She was the one that when gold went from like 700 back to 500, something like that. She called me up to console me, and I told her, don't worry, this bull market has a long way to go. That was many years ago. She was also one that she's been trying to talk me out of gold since way back when, So that's the broker. Nice woman, very nice woman. But, we don't see eye to eye on some things, but that's okay. And I wasn't there, but when my wife came home, how'd it go, blah, blah, blah. And she said, talking about stocks, the broker, stocks are going to go up. Yeah, they're going to go up. There might be a little hiccup, but they're going to go up. I wasn't there to see her visage when she said it, but I know, I kind of get a picture. And then what happened last night, I was with my wife and we were shopping, and I met an old friend, okay? I used to work with him many, many years ago. It's not the friendship like we get together and go out, or we call each other. We bump into each other now like once every 3 years. Back in the day, we were bumping into each other 99% of the time. It was at a restaurant, and we would make a joke about it, and we would bump into each other maybe 3 times a year. And he worked in the trust services, okay? So he was responsible for people's money, investing, trading, so on and so forth. So he knows a lot. Sharp guy, We always have, good, pleasant, fun conversations about stocks and the economy. And over the years, I've seen much less of him. I think the last time I saw him prior to last night was maybe 2 years ago in a restaurant, no less. So I see him, we're shopping, and I bump into him. We say hello, blah, blah, blah. And in a joking sort of way, I say to him, all right, so what's stocks going to do? Stocks are going to go up. That's what he said, flat out, stocks are going to go up. And what was so just disturbing, I'll use that word, to me, he said it with such an air of certainty. It was more than just, confidence. It was like it was a given. The stocks are going to go up. And why? Why do you say that? Well, where else are you going to put your money? Right? He said the same exact thing my stockbroker had said earlier in the day. Where are you going to put your money? And this is what they've done, people. But the way he said it, I walked away scratching my head. I couldn't believe it. Now, this guy also happens to be a silent partner with a group of people that build houses. And the house that I'm sitting in now, my house, they built. Okay? He's not a builder. He's not an architect. Okay? He just invests some money. So he asked me, oh, how's the house? How do you like the house? Well, oh, yeah, we love the house, We love it. And so then we got into the conversation of what the house is worth and how much it's gone up. And he's throwing out numbers. And I'm like, you got to be kidding me. I said, this house, we haven't been in it that long, this particular house. And I said to him, this is a bubble. This is a bubble all over again, right? And he starts making it show. He tells my wife, oh, you got to give him a little white pill. He's so depressed. Why am I depressed? I'm depressed because I feel prices just won't go up forever. That makes me depressed. I mean, this is insanity. Don't we know how this play ends? Didn't we just see this not that long ago? I'll say it right now. I think my house is in a bubble based on the prices that he's saying I can get today for my house. You got to be out of your mind. It's the same house. It's the same property. We didn't add 3 levels and blow out the fences and usurp our neighbor's property. So what's going on here, people? I just found it so telling, so just bizarre. So I don't know, but the way he just said it. Anyway, talking about a bubble. What am I going to say, people? You know what I'm going to say. I'm going to go back to The Big Short once again, right? Because Mark Baum, he finds out that somebody just did these credit default swaps and he's betting against housing, right? And he wants to get involved. He's like, all right, it's a simple question. 2 simple questions. Is there a housing bubble and how exposed are the banks? Right? Oh, I should say this also before I forget. So I'm like, this is a bubble. And he's like, well, have you been to the stores lately? I said, no, I try to avoid the stores, okay? He says, well, maybe that's why. If you go to the stores, you'll see how crowded they are. All right? So what does that mean? That people are in a frenzy, maxing out their credit cards, buying stuff they don't need for Christmas? And the fact that we all, him, me, myself, live in this little bubble as if this is the whole world, this little bubble where we live. So Mark Baum, he says it's 2 simple questions. Is there a housing bubble and how exposed are the banks? Well, I have 2 simple questions. If these malls are all so packed and people are spending money, I have 2 simple questions. How much are people earning, okay, and how much are people borrowing? Okay, so I look at some charts, all right, because I think it's pretty clear. This is wage growth. This is historical wage growth. Can you see that? This goes all the way back, 1950, something like that. Look at that. After that peak in 1980, it's been nothing but down, 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 right? We can't get out of this mud that we're in. There's no wage growth. People are earning less. That's a long-term chart. Look at that. This is 10 years, right? That peak, that was 2012, almost 2013. Down since then. We can't get any traction. And this is the big mystery that they keep talking about. Inflation and wage growth. There's a lot of mysteries, right? This is the 5-year chart, right? That's that same peak. Down. This is 1 year, right? This mystery about why we can't get wage growth. This is nominal wage growth. Okay? All non-farm employees is dark blue. Production, non-supervisory workers is light blue. Okay? And this is the Fed's target, which is up in the 4s. Okay? That gray bar. We're nowhere near that gray bar. Nowhere near. Wage growth, this is nominal wage growth, unadjusted for inflation. Right? So my question is, why are they raising rates, which they just did today? Why are they raising rates when nominal wage growth is nowhere near their target based on a 2% inflation? Why are they raising rates? This is the workers' share of corporate income. Look at that. That's a disgrace, people. That's in the gutter. The workers' share of corporate income. Labor not participating in corporate profits. Earnings are through the roof, right? With all the machinations that they do, right? Stock buybacks, right? Off balance sheet, right? All this nonsense, but the laborers aren't participating in it. Look at that. That thing fell off a bed. Labor not participating in corporate profits. Labor share of earnings based on wages, benefits in the gutter. Okay? What's the attitude with these companies? We're going to get lean and we're going to get mean. All right? And the beatings will persist until morale improves. If you don't like it, there's the door. All right? Bottom line is nobody's earning the money that they used to earn on a relative basis. It's just not there. Okay? Just recently, the other day, Friday's non-farm payroll report showed solid job growth of 228,000 for November, but a mediocre 2.5% annualized gain in average hourly earnings. They're just not making the money. They're working 2 part-time jobs, low-paying jobs. Economists believed heading into 2017 that the low unemployment rate would push wages higher, but they still haven't broken out, right? They think, okay, everybody's going to be working, now there'll be a demand, and finally we'll get that wage growth, right? That's these broken models, okay? That's what they do. White House economic advisor Gary Cohn told CNBC that the administration is optimistic that wages will move considerably higher in the year ahead. Considerably higher. This is the model, right? What's the definition of insanity, people, right? You keep repeating the same thing and you expect to get different results. They've knocked the unemployment rate all the way down, but they can't get the wage growth because they're mediocre jobs. Despite a mostly solid run of job growth, 2017 ends pretty much where it began, with the two-speed economy where wage growth is funneling to one end while the other lags behind. Okay? Clear as day. They're not getting the wage growth. The lack of wage growth at the aggregate level, despite the declines in the unemployment rate and strong job gains, remains a mystery. Everything's a mystery to these people. Okay? These are supposed to be, the intellectuals, right? Who we trust, right? It's all a mystery to them. They're flying by the seat of their pants. Said Joseph Song, U.S. economist at Bank of America Merrill Lynch, said in a note to clients, blah, blah, blah. Due to the lack of available workers, there's plenty of workers out there. They're dying for jobs. What's he talking about? Due to the lack of available workers and sustained improvement in aggregate demand, we expect wage pressures to be the primary economic narrative during the year. Just so much nonsense. Nobody's making money. So I have the answer to the first question. The second question is, how much are we borrowing? Household debt just surpassed the record level reached during the 2008 financial crisis. Right? Everybody is borrowing again. They maybe not be borrowing to do the same things, like let's get that second vacation home, right? But they're still borrowing nonetheless. Debt rose $149 billion compared with the last quarter of 2016, with nearly all the gain coming from mortgages. Reaching the peak raises questions about another financial meltdown, okay? New York Fed Reserve reports that household debt across the nation has hit a dubious milestone in the first quarter. It surpassed the peak level of 2018 at $12.7 trillion. Okay? It's unbelievable. After a stint of frugality, Americans have returned to their borrowing ways. But are they getting into the kinds of debt trouble that lead to recessions? U.S. consumers now owe roughly $12.73 trillion to banks and other lenders for mortgages, car loans, credit card spending, okay? Not to mention student loans. It's all the same, people. Debt up to our eyeballs. Nobody's making money. So I don't care if the malls are crowded with people running around buying all this nonsense right now. Okay? So I got the answer to my two questions. So this certainty, stocks are going to go up. Okay. Maybe I'll just take a pill and let it all happen. What can I say? So let's switch gears, people. Today was the Fed day. Janet Yellen, she'll ride off into the sunset. She steered the ship. She missed the icebergs. She created a few of them, but that's okay. They raised the rate 1/4 point. Okay. I was watching. I don't know if you watched the press conference and the questions. I watched it. I made some notes. They're basically expecting 3 rate hike next year. Okay. She made a statement. Inflation declined outright, running below 2%. They can't get this inflation. Why they want it is a mystery to me, but it's a mystery to them also why they can't get it. They can't get this 2% inflation. Okay, and it's clear. They don't know. Just like with this wage growth, okay? So many things to talk about with this FOMC meeting. This video is getting kind of long, but they all seem to be whistling past graveyards. They really do. There's just this cockiness, this uber arrogance that stocks have to go up. Maybe they will, but I don't know. This Bob Pisani, he talked about this Bitcoin craze. He had this smug look on his face, Oh, what about this Bitcoin craze? Bitcoin's in a bubble, and I'm not saying it's not. Okay, but he would never mention that perhaps stocks are in a bubble too. And then when they asked Janet Yellen about evaluations, she said, well, we think they're a little elevated. But she twisted like a pretzel because she had to say, but that's okay. She stood there with 2 feet in one shoe, talking out of both sides of her mouth, saying, well, evaluation. We don't get evaluations right sometimes. They know what the GDP is going to be. They know what wage growth is going to be, okay? But when it comes to stock market evaluation, well, nobody kind of gets that right, so it's not really elevated. So party on! That's basically what she was saying. Then somebody actually ventured in about negative interest rates. I mentioned that guy, good friend, okay, who's no friend of us, right? And his negative interest rates. So somebody asked the question, is that a possibility? Because they were talking about all the stimulus tools that the Fed has at their availability, right? And she basically said, well, just go back to the same ones. We have a cushion to cut now if we have to. We have QE, okay, and there's additional scope. What's this additional scope? Was it just drop money out of a helicopter? It could be that, okay? Or it could be negative interest rates, right? Well, in theory, academics are studying it to see if it's worthy, and, all the central banks have done it, but we haven't really, blah, 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 blah. You saw it, plain as day. That's where it's coming, okay? It's going right there, negative interest rates, all right? So, it's just, and then, of course, the yield curve, she had to explain away the yield curve. Historically, she said, there's a high correlation, and we talked about this, between a flattening yield curve and a recession. She says, but correlation doesn't cause causation, all right? So she kind of wiggled out of it with this, what she called it, this term premium, how that's low. So this time, the flattening yield curve doesn't necessarily have to cause a recession. This time it's different, people. Party on. Okay? Stocks are going up. That's all there is to it. Gold went up today, right? They do this all the time, people. They bang it down, they bang it down, they bang it down, right? Then you get the FOMC meeting. That's where it seems to bottom off, either the day before the statement or the day of, right? And then it goes up. Right? So it's like they take it down, so when it goes up, it'll only be right back where it started from. That's what they do. It's so manipulated. It's unbelievable. So again, is this the bottom in gold? The next 2 weeks, there might be some quirky things going on. Maybe some reshuffling, right, of portfolios, maybe some tax loss selling. So between now and the end of the year, there just might be some things like this happening. But perhaps this was the bottom. Okay, and now we'll see. Time will tell if we can do what we've done the last 2 years and have a nice January. So that's about it, people. We live in interesting times. I want to thank you all for your viewership, your comments. Beautiful day out today. A little chilly, but still took a nice brisk walk earlier in the day, and just it's good to get out, clear your head. You need that, people. You really need that. Got to get out. It's good for your spirit, your soul, and your body. Have a nice night, people. Pick it up tomorrow, Lord willing. Ciao.